as part of the project.
Right. So in the shareholder letter that was just released today, Jane mentioned that two things really support the success of the company. One is running a great bank, which he has control of, and two, the vitality of the United States. So this security and resiliency initiative dovetails well with that notion.
All right, Herman, we're going to continue to pester you about this letter. It's 48 pages long, so I still need more detail. Herman Chan runs our banking coverage at Bloomberg Intelligence. Let's get more on today's market moves with Bloomberg macro strategist Michael Ball. And when you're trying to figure out what's going on, Michael, especially when you look at the president's new budget, he wants now not 1 trillion for military spending, but 1.5 trillion for military spending. Do you look at like the Northrop Grummons and the Raytheons of the world? I mean, they're going to be the big beneficiaries. The industrial military complex is going to get more and more revenue.
And that number's been out for a few weeks. And with the war, you have seen those bid up. And you've seen the global defense industry being well bid as well for a while now. So it's not something I would chase necessarily, but you're right. Those would be the benefactors. Now, whether or not it can get through Congress or not, very uncertain still. I think he's going to have a little trouble given the cuts he wants to do to some of the social safety welfare programs as a trade-off. And that's probably not going to fly.
Well, I see those numbers. I just think about the huge deficits that we're running, that already there is spending that came from the one big beautiful bill. You have a Fed that can't really assist by cutting rates to help with some of the costs of servicing that debt. What does that mean for this bond market? Is any of that getting priced in at the long end of increased spending, maybe even more stimulus as we head to the midterm?
Yeah, you've certainly seen the curve steep in the last few days since Powell spoke last Monday, kind of easing these hiking fears, saying that we're going to be patient, we're going to look at the trade-offs. We're not anywhere close to a Volcker moment where we have to go and start raising rates aggressively to step on inflation. Like they're just going to tolerate higher inflation. So to your point, should be a higher term. To your point, the dollar's been doing well as a safety haven bid, but the longer term view is the dollar then will be less in circulation as a trade currency, as a result have a lower bid.
Well, we even heard a speech from Emmanuel Macron heading into the weekend in Asia saying something very similar to Mark Carney, that the middle nations should come together and fight some of what we're getting from the US and China. I wonder if we can extend that to what we're seeing in the Middle East and Iran. We saw a French ship and a Japanese ship be able to get through the Strait of Hormuz. Could we see a new normal where away from the US negotiations are made that help get some of the ships through the Strait of Hormuz? And what would that do to markets if that becomes the new normal?
I think it is the new normal. I think it is a re-regionalization where the U.S. effectively signaled to China and Russia that they're going to take over their hemisphere, hence Venezuela and why we went there, and potentially Cuba. And we're going to forego some responsibilities elsewhere. And that doesn't bode well for people who have been behind in their military spending and means more deficits globally. So going back to your point about the treasuries, like the global rates market itself has to price in more military spending because there's less of an insulation from the U.S. supremacy or hegemony that we've had for multi-decades since the end of the Cold War. So again, markets like to trade things by the minute, by the headline, but this is a tectonic shift that everyone now has to step back, take their weekend reading.
To put a stop loss.
Treasuries are still making out. 10-year is still at 4.34 right now. Even though we're seeing foreign ownership, right? 32% of U.S. treasuries are owned by foreigners compared to half 15 years ago. Central banks last year became net sellers of treasuries in 2025, and central banks now hold the treasuries globally. Why?
Volatility coming in.
Yeah, I mean, there's clearly a safe haven bid as capitals come out of risk assets. We obviously have some credit concerns. We've had the AI angst with being sort of that whack-a-mole of single stock names. All of that going into this had already given somewhat of a plateau. Further, I think what's an interesting point is there's just no alternative. There's no depth elsewhere. So one of the best things that some of these other countries are going to do is issue more debt, provide a more
and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the time. The thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the technology trend and the investment is real.
Good morning. This is welcome back to the opening trade. This is your trade. This is Wall Street. Welcome to Balance of Power. We're watching Bloomberg Deal. Welcome to Bloomberg this week. This is Bloomberg Television.
Up to the minute geopolitical news whenever and wherever it's happening. I'm Anna Rupert in Caracas, Venezuela, and this is Bloomberg.
Welcome to Monday. We've got just about 20 seconds left until the opening bell. We could have a fourth straight day of gains, but we're fluctuating here on futures right now. As you can see from the S&P doing a whole lot of nothing there. NASDAQ futures are still up, as are the small caps. We've got Charles River Laboratory ringing the opening bell at the New York Stock Exchange. They're down about 43% in the past 5 years, but that, although it sounds bad, is better than Latham, the pool company, celebrating their 5-year anniversary listed in the NASDAQ, in which time they've lost 73% of their stock's value. So those investors are underwater.
Nice. Well done, Matt. I have nothing to say to that. That's a good pun. Okay, anyway. Moving on from the aquatic theme of the morning into what energy stocks are doing. They're moving back and forth with the price of oil. When oil is down, so too are these companies, but they're not down as significantly as they were a mere 30 minutes ago. Again, that's because the price of oil also fluctuating this morning. Exxon, Chevron, Occidental are still down as much as about 0.5% for Oxy. Matt?
All right, I'm walking Mag 7 stocks. As I was saying earlier, they outperformed last week. Tech stocks were the best performers, and we're looking for potentially an extension of that. I've been reading the MLAT blog on the Bloomberg terminal. You can read it too. MLIV Go is what you type. Tesla, you can see up 1%, Meta up 1%. NVIDIA is down a little, only 0.2%, but maybe these stocks are seen as a safe haven. Stuart Kaiser, head of U.S. equity trading strategy at Citi, is still with us. And is that the case? Like if you're worried about everything going to hell in a handbasket, do you buy stocks like this that you know are going to continue to generate a ton of revenue?
I mean, we've definitely seen, I think, a bit over the last week for large cap growth stocks, and then the tech stocks would kind of fit into that group. Mag 7, I think, is less being treated as a group right now, and is actually being treated very idiosyncratically and stock specifically. So I do think if you have a favorite Mag 7 stock, yeah, that's a place you might want to hide at the moment. But it doesn't feel like investors are willing to blindly just buy those large cap tech stocks.
By the way, we haven't even done that badly. I mean, for all of the hand wringing and breathlessness on this show this year, we're down less than 4% on the S&P. Like, if you told me before we're going to start a war in the Middle East, which seems like the worst possible idea, and oil is going to double in price in a month, I would think you'd have a huge loss, and we haven't done badly.
Yeah, the index itself has held in pretty well. I think that kind of speaks to the largely energy independence of the U.S. Underneath the surface, there are some some pretty big pain points, and I think what's really hurt investors is early in the year, people really wanted to lean into this kind of cyclical story. So if you were in energy, that's worked very well, right? If you were in the materials and consumer stocks, which a lot of people own to start the year, particularly ahead of those tax refunds, you kind of owned the exact part of the market you didn't want to own going into a war in the Middle East. So agree with you. Indexes held it exceptionally well, but there are some real pockets of pain. And unfortunately, those pockets are in areas that people were very bullish in to start the year.
I still keep playing this conversation over and over in my head. And it's one that I've had with Matt before. I had a conversation with someone from a hedge fund who basically said to me, you're covering markets all wrong. The fundamentals don't matter anymore. It's all just pod shops that put their money increasingly towards the ones that are winning. So it's just a big momentum market. And that's all that matters. And the fundamentals aren't at play here. How much is this a market structure that is dominated by positioning? That the fundamentals and what we think is going to happen with oil, how companies are behaving, That is unchanged at $109 a barrel. Let's get some of the top calls that the analysts have been upgrading and downgrading. First up, Bank of America downgrading Carvana, saying that the setup isn't as attractive as rising oil costs and higher rates start to squeeze consumers. So here's a little thing. Next up, Piper Sandler, they upgrade Tyson Foods, saying beef and chicken demand is picking up as the company rides a shift towards protein-heavy diets. The firm also says Tyson is not really exposed to GLP-1 weight loss drug risk. It's probably a benefit for them because everyone's now watching their macros rather. Tyson Foods, though, down 0.25%. Finally, Goldman Sachs, they upgrade Netflix on optimism about its earnings. The firm expects a strong start to the year as it delivers on its main priorities. Those shares up more than 1%. Matt.
All right, cool. Wells Fargo, by the way, upgrading the tech sector, citing strong fundamentals and AI tailwinds with further upside. Elsewhere, NVIDIA partner Han Hai, also known as Foxconn, reported roughly a 30% increase in quarter sales.
Oh, I should have entered on the NASDAQ. Should have got 200 ticks on the NASDAQ.
Intelligence. Hey, Mandeep, always great to have you on the program. Always great to talk to you. Do we continue to see growth beyond what we expect for the AI sector as a whole?
I mean, when I look at, some of the recent data points like GitHub commits, they did 1 billion commits in 2025. Now the weekly commits are 275 million.
And what are GitHub commits?
So let's say, you've got Claude or any of the LLMs doing some sort of work for you. It could be.
Hold it. Look at that. Now it's going. It's moving up. Damn it.
GitHub has the
Every time.
to actually write the code and then back the file.
Don't know where to trail. I can't. Just hold it.
Committing, and they're counting that commits
Above VWAP.
or an agent generated commit. And so
Back.
being like these LLMs right now are seeing that
Pretty here.
adoption where everyone is using them to a point where the commits have grown.
Man zone here cannot
on
break
a weekly
down. Sellers tried. Get back. It was just a swing going up.
about a 10x
Now it's leaving, and
You're seeing the shift from 20
man, look at NASDAQ. NASDAQ is already from that same level of entry right there. Right. Be up almost 300 ticks by now.
heading out because companies are
Let me see.
and that's what's driving the infrastructure demand, whether it's memory side or server side. And unless
SPX chart.
it's hard to see how people will stop using it. If anything, the
Analyze the
supply
SPX here.
escalate because you can get some of the components because of the macro situation.
I was also thinking about that just in terms of the data center build out, that a lot of it's happened in the Middle East and they're undergoing big projects too. Has war changed
It's just moved fast.
the threats to that specific infrastructure? How does it change the dynamic?
Yeah, I mean, just over the weekend, we had this news of an Oracle data center getting hit. We've heard that for Amazon. So in those type of cases, clearly, you're going to shelve some of those new projects. You're not building any new data centers, but that's just like 2% of the overall data center capacity. And so if anything, because of the supply shortages, those components could be reallocated, whether it's on the memory side, to where you feel safe about building the new data center. So that demand supply mismatch is still so strong that you can reallocate a lot of that capacity that you would have allocated to Middle East. So from that perspective, I do feel the demand side remains intact because of the trends that I highlighted. Even the TurboQuant news from Micron, it's actually a positive because guess what? You can do more.
Plus 300 ticks. Nice try.
So all this points to more usage.
So that's the problem. I was wondering what the deal is, why Micron and SanDisk are having issues. And now I'm putting 2 to 2 together and remembering that some technologists have figured out how to fold space in a way that means we need to use less memory, right?
Yeah, I mean, it's a compression technique.
Just 2 break-even setups today. The first one, I forgot to put my stop loss, so I couldn't hold it, which I would have gotten more to trail it. Well, actually, trailing that first one, I would have gotten stopped out anyways. eventually. So that would have been break even, same place. So I got break even first one and another break even on the second one because oh
Nothing should. Micron has guided to 81%.
analyze the
50% estimate revisions
ES
to their full year sales estimate. So when you see
entries on the NASDAQ.
the other side, then things will come down and it will peak. But right now we are at least a few quarters away. It doesn't feel like it's gonna happen in the next.
Well, isn't that whole thing of just efficiency means that you can use more and there's more demand?
Yeah, that's the Javon's
Yeah,
paradox.
exactly. Yeah, we all learned about that last year. Continue to use it in daily life.
VWAP here.
Thank you so much for joining us. That's Manjeet Singh of Bloomberg Intelligence. Coming up on the show, JP Morgan CEO Jamie Dimon, Wall Street. We'll get you the annual letter to shareholders or break it down with Cato next. This is Bloomberg Open Interest.
When I moved
David, she is here in the studio with me. Nalia, what do you see?
Hi, Matt. So it's a relatively quiet morning, but still we have some movers. Let's start with Solena Therapeutics. Shares are up by almost 30%. The move came after Financial Times reported that the company Neurocrine, it's another biotech company, is in advanced talks to buy Solena Therapeutics in a deal that could value Solena at about $2.5 billion. Now let's switch to energy stocks. I'm looking at Exxon, Chevron, Occidental, and pre-market. So those shares are moving lower following, of course, losses in crude prices as investors kind of assess possibility of a ceasefire and Iraq that got an exemption from Strait of Hormuz transportation of its oil, of course. And then finally, memory stocks. Micron and SanDisk, they are moving up today after Mizuho said that investors should take advantage of that weakness. We know that those stocks fell sharply from recent highs. So they said that those concerns about memory stocks is already behind us.
All right, Natalia, thanks very much, Natalia. Can you give share with some of your movers coming up throughout this hour? We're going to speak with Jeffrey Stewart of GPO Fund on the highly anticipated SpaceX IPO. We're going to look ahead to a host of economic data this week with Terry Wiseman of Macquarie Group. But first off, today is President Trump's, extended deadline for Iran to reopen the Strait of Hormuz. He set multiple deadlines before. On March 26th, he gave Iran a 10-day deadline, which would have ended at 8 p.m. Eastern tonight. That had been extended from a 5-day deadline he gave on March 23rd, which was already extended from a 48-hour deadline that he set on March 21st. On Saturday, he said Iran had 48 hours, which would have expired at 10 a.m. this morning. But yesterday, he seems to have extended his most recent deadlines until tomorrow night at 8 p.m. Eastern Standard Time. This all comes as Israel and the U.S. carried out a wave of attacks on Iran overnight, killing more than 25 people. Let's get to our team coverage with Bloomberg's Dan Williams in Jerusalem, who covers the Middle East, and Kasia Kleminska in Washington, who leads our D.C. breaking news team. And Dan, let me start with you. Are these deadlines getting it a little bit difficult to keep up with? And what exactly do we know is going to happen?
We've got news coming up here.
Good morning. You'll get the deadlines up.
Less than 7 minutes, under 7 minutes here to the PMI.
Salty post by the U.S. president, most recently
So the
reiterating
cost for manufacturing is just forecasted to go down, but we'll see.
Similar statements in multiple media interviews in the interim. Many of your viewers will be aware of the term deal heat from the world of business. That is when one side of a negotiation is so keen to close the deal, they might actually be rushing into a bad deal. I wonder if this delaying of deadlines and increasingly heated language from the White House might be suggesting a deal heat on the part of the United States. The Iranians certainly don't seem to be under any pressure. They're pushing this off. They're sticking to their demand for full reparations, they say, for the war and a full exit of US forces before they consider unshackling the Strait of Hormuz, which they've effectively taken over. So time will tell. We're now waiting for the latest deadline, which you cited. The war continues, certainly when it comes to what the Israelis are saying. They're not especially optimistic. There'll be a deal, and they see every day as potentially one in which to gain further achievements against their arch enemy, Iran.
Kasia, what do we hear out of Washington, D.C.? I mean, the president's post yesterday seemed, frankly, a little bit unhinged. Are senators and Congress people worried about the president here? He's using increasingly religious language as well.
Matt, look, here in Washington, we are pretty used to all of this. We are used to President Trump setting new deadlines and issuing threats, but you're absolutely right. Over the weekend, Trump increasingly focused on this graphic language, threatening Iran with bringing hell and blowing everything. What he wants is for Iran to open the Strait of Hormuz. He's very concerned about raising oil and gasoline and jet fuel prices, and he knows he has to address it. So we will hear more from President Trump today. He will speak at 1 p.m. He will give a press conference here at the White House.
I mean, he said before that he doesn't care if they open the Strait of Hormuz, and he doesn't need anyone's help. Also that he needs everyone's help. He's used, I believe, the F word for the first time in a post, and I haven't heard previously that God is great or any kind of praise to Allah language in his tweets. Seems increasingly desperate. What are we expecting to hear from him at 1 o'clock?
I agree. It does seem increasingly desperate. Trump also previously had told Americans that it's worth to pay perhaps a little bit more at the pump to suffer this short-term pain for the long-term gain for Iran not having nuclear weapons. I do expect him to focus on this theme again today to kind of talk about what is the goal, the long-term goal of this war, which is also something he has struggled to communicate. And he is facing increased criticism. Obviously, Democrats use the weekend shows to go out and criticize what looks like lack of strategy, urging President Trump to tone down the rhetoric and seek a solution. But again, we'll see at 1 p.m. whether he will do anything like this. I think this 1 p.m. press conference will focus more on President Trump praising U.S. military. He really wants to come back to this victory rhetoric. He wants to praise the operation over the weekend, which led to rescue of U.S. airmen from inside Iran after U.S. jet crashed down there. There was a 2-day rescue operation that resulted in bringing this airman back. And Trump has already said that even as he is wounded, he will completely recover.
Dan, what do we expect in terms of military action? I mean, you're reporting from Israel, where Benjamin Netanyahu has grown used to being accused of war crimes. A lot of people are saying that if the U.S. were to attack power plants or desalination plants, that could also be considered a war crime. Does that matter? Will it happen anyway?
I think behind the scenes, the Israelis and the Americans are concerned that should
this threat be carried out, it might risk alienating the very population that both Trump and the Israeli Prime Minister Netanyahu said at the outset they would like to see take over Iran. After, as they put it, the regime would be demolished or degraded sufficiently to be toppled. So aside from the legal issue which you cited, I think there's a practical concern here in terms of the long-term, long-range ramifications of such attacks. For now, the Israelis are pursuing classic military targets, as they would call it, saying that overnight, for example, they killed the chief of intelligence for the Revolutionary Guards Corps, a significant achievement, albeit someone who had apparently not been in office that long, given the succession of senior chiefs being killed and replaced in Iran. So the Israelis, for now, in terms of their public statements, will continue focusing on senior personnel, on nuclear targets in Iran, ballistic missile targets, and other military targets. They've indicated in the past an ability to hit energy targets. However, that has been one-off attacks, and it will remain to be seen. As usual, Trump, I think, pulls the shots in this war, including when it comes to changing target sets. I'm not sure the Israelis would relish entering into that fray in terms of civilian targets, but time will tell if even the Americans will do that.
And thanks so much for your reporting. Bloomberg's Dan Williams there on the ground in Israel. Kasia Klimasinska in Washington, D.C. Now, both Brent and WTI, as you saw earlier, are coming down a bit right now, though at relatively high levels and after some fluctuation this morning as traders weigh reports around the war. Let's get more with Bloomberg's Anthony DePaola. Anthony, what do you see in terms of, the ever rising price of crude? What kind of knock-on effects is this having on the economies that need that oil?
Good morning, Matt. As you mentioned, crude is higher today, fluctuating, bouncing around as traders have a lot of information to take in. We've got, as you mentioned earlier, those conflicting deadlines and timelines on in terms of potential for peace talks or all-out attacks. So that's lots of whiplash there. Plus, we've got some other data out over the weekend from an OPEC Plus meeting yesterday, where they agreed to add some barrels to the market that they can't really add because Hormuz is closed. And then we've got Saudi Arabian oil
PMI is lower.
State producer Saudi Aramco,
So
where they're
it shows that the cost for manufacturing has gone down, which is just another form of inflation. There's the CPI, which is a consumer price index. That's for cost for
that is creating the strains that we're showing
retail people, and this is for the commercial aspect of basically cost. The inflation for manufacturers,
they're not
different companies, so that's down. Let's see here.
Refiners aren't getting the crude oil. We're not able to use diesel for trucks, jet fuel for
price react.
In fact, we're seeing that where you are in the States, where gasoline prices are increasing. So really impacting that, and it will be a bigger impact the longer that Hormuz stays shut, Matt.
Anthony, we're often told that the U.S. is insulated from the closure of the Straits of Hormuz because we are such a huge oil-producing nation. We have more oil than any other country on the planet. But I'm looking at just regular unleaded at $4.12 now a barrel. Diesel here in the U.S. at a gallon. Diesel in the U.S. at $5.62 a gallon. Why are we seeing prices rise so much here if we're so insulated and independent?
It's a global market, so when the prices increase because there's not enough oil coming out of the Gulf, so they increase for the producers in Asia, they will go somewhere else and look to buy it. They'll buy it maybe from barrels from the Atlantic Basin, oil that would have been coming from America. So that's that pull of those U.S. exports as well that raises the price for those crude, because now in the U.S. you've got the option of selling it to a domestic refiner who can produce gasoline for the domestic market, or they've got that optionality to sell for export. So the crude market is really impacted because it is a fully global market. So this idea that the U.S. is insulated, may be insulated on supply because there is a lot of gas, natural gas there in the U.S. There's a lot of oil. But the U.S. is exporting now as well too. So that global price really impacts the United States. Aside from the fact that a lot of those products that are exported out of Hormuz, out of the Persian Gulf, do go into things like chemicals, like plastics, like semiconductors. So a lot of those things that we buy globally and that you buy in the United States are going to be getting more expensive as those manufacturing costs rise because one of those main components, the oil, the petrochemicals, the plastics, that's lacking coming out of the region here.
Anthony DiPaolo, really appreciate your reporting. This is Bloomberg.
Nationwide has strategies built to help you save time.
It's a game changer.
Their timely market insights help simplify conversations with your clients. But sometimes those who see the correlation between things above.
This is Bloomberg Brief. I'm Matt Miller in New York. Investment banks leading the SpaceX IPO are said to be meeting today to prepare for the deal. That's according to IFR. SpaceX sits among the big name companies, the biggest name companies, such as OpenAI, Anthropic, and Barrick Mining, targeting an initial public offering this year. Joining us now is Jeffrey Stewart, Managing Director of GPO Fund and author of Global IPO, the Great Rewiring of Capital Markets. Jeffrey, great to have you on the program. Let me first ask you about SpaceX. I mean, I want to get kind of to all of these and to IPOs in general, considering your book and what we've seen in terms of the evolution of the IPO. This will be one of the biggest ever. What do you expect?
I expect it'll be priced well. Everyone in the world is looking at it, and there is a lot of interest in getting into IPOs globally. I think that it'll do well, but it's big, and how much bigger can it get at that size?
So I wonder why SpaceX and OpenAI need to go public, considering the fact that so many companies have stayed private for much longer. I mean, is there a tipping point at which private markets can just no longer offer the amount of capital needed to fund the kind of growth that these companies want to see?
Yes, that's exactly what's happening.